Thank you, Michael. Very timely, very important. We are in the FB, and it's, as far as I'm concerned, it's a bullseye. This is exactly what we need, this sort of research, so that they can go into our policy decision making. We are at a time now where we have putting our thinking caps on for new budgetary measures and coming up with a new fiscal package for the next financial year. So I think this is, for me, it's been very timely. And we will be talking to you in greater detail on this. Now we have two panelists, and may I request the first panelist, Dr. Rathin Roy, for his views and comments. And Dr. Saab, you have 10 minutes.
Thank you, Chairman, and I'd like to thank IGC Pakistan for inviting me to this lovely city and this very interesting conference. Let me start with Professor Olken's paper, which was, I think, as the chairperson was saying, extremely rich in providing policy options. I would submit not just in Pakistan, but also for something that bedevils all South Asian countries, which is, we know are rich and corrupt, invest in property. So how do we get some of that back into the tax system? I have 4 comments here, I think, 4 or 5, 4 I think, principal ones. The first is that is a relatively minor one, but important in policy terms, that what we are trying to get to with property taxation, just like you have in Europe at least, is a system where rules, rather than discretion, allow you to collect taxes. When I lived in the UK or in New York, I paid property taxes based on a set of rules, and intervention and discretion was relatively minimal. In that regime, the role of individualized incentives is also relatively minimal. It must therefore follow from that when we talk about incentives as a policy option, not your research, that's a transition. It's a transition from a system where you have to provide individual incentives to collect property taxes to a system where you can move that is rules-based. And there is a danger here at the policy level, which your research rightly does not address, it's not supposed to, that setting in place permanent incentives to use discretion virtuously or otherwise will infruct the ultimate development of a rules-based system. So that's just a warning. It's not automatically always true that incentivizing tax collectors is a good thing in perpetuity. The second point I have is a South Asia specific one, which is interesting. That, I look at South Asian taxation systems as being very old and very medieval. Tax farming is medieval. That's how people collected taxes all over the world, and the idea that you do not do tax farming is a relatively recent idea intellectually. Tend to come rather suddenly, and because of a variety of things, crony capitalism, corruption, small elites, being, on both sides of the fence, doing the collecting, influencing what taxes are collected. All these things mean that when governments are faced with a resource crunch, and I'm sure the chairperson knows this, the instinct from the finance minister is medieval, where you call your top tax people and give them a number and say, I want this target met. The discussion is one of targets. It's not one of optimal tax collection or how much should be collected. So in Hindi or Urdu, they tell you, जाके ये tax ले आइए, अगले साल देखा जाएगा. And then you do the usual things. You overtax this year, you adjust next year, you negotiate. So in that circumstance, when we look at something like property taxation, the results that you were getting are not counterintuitive at all. I would expect in a medievalized system something that is good in terms of raising revenue to perform better than something that is good in terms of providing taxpayer satisfaction or indeed equity or fairness, about which your results are silent. I don't know whether equitability or fairness came into the assessment of taxpayer satisfaction. It'd be interesting to know from you what that perception was. In either case, if that were to follow, it is not necessarily therefore true automatically, if you're interested in moving to a more rules-based system, which I think is the ultimate quest here, that one necessarily calibrates intervention in taxation systems with a view to maximizing rewards given to revenue collection. Again, you have the transition problem. So that's my second comment. My third comment is an old problem specific to property taxation, which is a fiscal decentralization problem. I didn't know about Pakistan, so thank you, Chairman. There's a distinction in property tax in decentralization between, in an ideal system, What you would have is that the people who control the funds, control the functions, and control the functionaries. Now, with property taxation, that's not the case in Pakistan. It's also not the case in India, and it's quite interesting. I understand that provinces collect tax on behalf of cities. They keep 15% and they give 85% to cities. Now, this means you already have a fundamental disconnect in your fiscal system, just like we do in India, which is the people responsible for spending your taxes are not the people responsible for collecting your taxes, or at least 85% of them. The job of the tax administration at the state level is to collect the taxes. The link between that and taxpayer, what the taxpayer gets from that tax collection is dysfunctional. And I think the next stage of research, therefore, ought to be at a broader policy level than NBR, to see whether that dysfunctionality in link has anything to do with a common problem in research in India in South Asia actually has pointed out, which is that property tax valuations consistently lag real valuations. So that was my third point. My fourth point is on willingness to pay, which is something I'd like you to elaborate on. Given this disconnect between those responsible for spending tax resources, that level of government, and the level responsible for collecting it, to what extent did your survey look at issues of willingness to pay? So that's my comments, and I thought a terrific paper for South Asia, really terrific, so thank you. I have a very short comment on the second presentation, which was quite interesting but completely new to me. It's fascinating that these censuses were done. It's great we're giving out frequent flyer cards, but normally the way you incentivize people to pay more taxes is to either make their lives easier if they pay them on time, or to pay taxes in an imperfect system, which we do in India, ahead of time. So you'd say, give me some tax and I'll pay you more than you would, I'll pay you a certain amount that you would get from a bank, advance tax, yeah? And that amount will be attractive to you, so pay me. It would be interesting to know from the second presenter whether that incentive, as opposed to this sort of frequent flyer, micro incentive, which one would the second presenter think work better? Because we're used to the first one and it works very well, at least in India, in most cases. I'm not so sure about the second. So again, a policy point that when we transit from one policy regime of incentives to another, we need to, incidentally with both presenters, that was something I would suggest in the paper one talk about. We're not starting from a tax system which is zero incentive. There are plenty of incentives in extant tax systems in India and Pakistan, the wrong kinds. Good in the introduction, I haven't seen the paper, to have a discussion of those extant incentives and then talk about the new ones that your research is flagging. Finally, the point on salaries. Now, I find this very puzzling because the numbers that you mentioned in your paper point to a very simple MIS problem initially, which is, and this is because normally in firms, the higher I report what I'm paying people, the less tax I pay on the corporate side. So there's an automatic incentive. I get the sense from your paper that is not working in Pakistan, and that is fascinating to me. I did not understand, maybe the audience could help, why it is not working in Pakistan. It's a fairly automatic thing. It's a small base. You should not see collusion between firms and their employees because those incentives simply don't elide typically. So that surprises me, and I'd like to get your reaction and that of the audience on it. It appears to me in conclusion that from your paper that what is being violated in Pakistan in terms of the tax structure is a very simple canon of taxation. And please confirm whether that's correct or not. When you say we tax incomes, a factor of production, it doesn't matter the source of that income or where it is earned from. It shouldn't. You may give exemptions for it, but it shouldn't. It appears from these different sort of price points, the distinction between salary and non-salary, the very elementary canon of taxation is being infracted. If that is the case, if I'm correct, then the solution is relatively simple but doesn't need research. I mean, we need to end that and simplify both the price points, the tax points, and the canon of taxation. So unless I'm missing something, I'd like to get your reaction to that. I'll stop there. Thank you.
Before I ask my next panelist to respond, Mr. Benjamin Olken would want to give certain clarifications for a couple of minutes.
Thanks. I just wanted to clarify. Thanks very much for your comments. I wanted to just make two clarifying remarks. In part, given the sort of the short amount of time, of course, I didn't have a huge amount of time to discuss the way that the tax system works. But in fact, I just wanted to clarify the property tax system is 100% rule-based here. And so in the sense that basically, in fact, your property tax is a pure formula as a function of the characteristics of your property and with rating tables. And so it's purely formulaic based. And I think that's actually very important in terms of thinking about what the implications of the results that I presented here are for this type of performance incentives in other areas. And I think, in some sense, I would, in terms of, for example, at FPR, I would say, you never know unless you actually study it. But I would guess that in cases where there's a lot more ambiguity or a lot more room for a lot less clear formulaic-based tax assessment, you might have even bigger effects than the effects that we saw here. And so I just wanted to clarify that in some sense the effects here I think are in some sense a lower bound for what you might expect in other contexts where there's much more room for discretion. And the second point I just wanted to clarify, since I went through this quickly, is you're absolutely right that incentives for tax collection involves a trade-off between, potentially, theoretically, involves a trade-off between the revenue you get and the implications for taxpayer satisfaction and for equity and accuracy of tax assessment. And in some sense, understanding what that trade-off looks like was one of the key things we were trying to do in this study. And one of the, I think, we ran this was run for 2 full fiscal years, and we did a massive property survey at the end. We surveyed about 14,000 properties. To me, in some sense, the surprising result is that trade-off was not nearly as stark as we would have expected. So I think that there was a large concern that if you just incentivize revenue, you're going to, people are going to get really unhappy. There's going to be equity considerations. In some sense, we're just not seeing that as much in the data as we expected. And so I think that's a surprising result, but one that I think is encouraging for the use of performance pay and tax.
I guess what I'm saying is I can understand why that would be the case.
I think a clarification from my side, from tax year 14, which is the current financial year, there has been a cleansing exercise that has been undertaken. Now the non-salary income is also largely going to be taxed at the salary rates. Earlier we had a separate rate for rental income. From this year, we've done away with it. It's now going to be taxed like regular income. The only differential still would be on dividends, which is taxed at 10%. And the other major area is agricultural income, which of course is a provincial tax. So that's something that is beyond our mandate, but that can be declared in your agricultural returns, in your income tax returns also. So the FBR would recognize it at a valid source of income, but would not be in a position to tax it. So that's the complexity that we have in our system. But there has been a cleansing being done. The rental income is as regular income, and because your data was for the previous years, that has not been captured in this research. May I now request Dr. Sajid Bhalla, Chairman, Oxis Investments and Research, for his comments and views, please.
Yeah. Thank you very much, and thank you, authors, for a very rich set of papers, which reminds me that, my basic view of what's a good paper is not necessarily the questions it answers, which of course it should attempt to do, but the additional question it raises. And like the saying goes, ye dil mange more, so we want more because of the questions raised. Now, there are 2 or 3, I have 2 or 3 comments on each of the papers, and just illustrative, and Dr. Roy has covered some of the points I wanted to make, so which is fantastic. The first is, what I missed from the first paper was that what is the compliance rate? What is, if God was the taxpayer and God was a tax collector, how much would he collect and how much are you collecting now? So just to get an idea of the order of magnitude involved with the problem. Maybe we don't have a problem, maybe we do. The second thing I missed from that paper was, what is the tax rate? To me, in terms of taxation, the rate at which it is charged is a very important, if you will, parameter, barometer of what the tax compliance is likely to be. And I will come on the last paper which does answer some of these questions. But in property taxation, I have no clue. Now, in India, we have, and property taxation is both in terms of the rate, if you will, on just the property that you have, and the capital gains taxes. So what is, though that wasn't the ambit that you covered, but in India, we have a very high capital gains tax, which is 20%, and the compliance is very, very low. And as Dr. Roy mentioned, there is a lot of discretion. If you have discretion, you're bound to fail. The old adage, I would say, about taxation is keep it simple, stupid, the KISS principle. And if you violate that, you don't need to do research to find out what is going on. And this is a tangential comment, you know, that in the earlier session, it was reported that what we need is more evidence. We lack evidence. Now, not to sort of popularize or advertise my column, but I've had a column in India, a weekly or bi-weekly newspaper column, which is called No Proof Required. And the element of that is that in India, we do not lack evidence. You present as much evidence, but the policymaker is going to ignore it because it is in his or her interest to ignore it, because there is rent seeking, because the political economy of taxation seems to me much more important than, if you will, the salaries that individuals get or do not get. So I think much more can be gained for societies, for especially our subcontinent societies, by understanding the political economy, which is really rent-seeking, good old-fashioned rent-seeking, which is whether it is on the part of the bureaucrats, or it is on the part of the politicians, or it is a part of the taxpayers. That is where you get maximum gains from, and I will illustrate with a few examples from what the evidence from India is. Now on the Bangladesh paper, you know, again I found it's interesting idea, but again, you know, the bang for the buck is very, very little. That how much peer pressure will get you to increase your tax payment or not. And as predicted, the poor, as you know, predicted ex ante, if you will, the poor are not affected by this. The rich are affected a little bit by the peer pressure. But again, I want to ask, you know, what is a tax rate? What is the information mechanism? What is a punishment for non-tax payment? That seems to me to give you a lot more elasticity than, if you will, peer pressure. I'm not a big believer in peer pressure. It doesn't work. I don't know too many societies where it has worked. But tax rates and enforcement and, if you will, discretion. Discretion works in the opposite way. Those are the things that really, really work, and those are the things that you need to address, both as a policymaker as well as, if you will, a researcher. Now to Michael Best's study, which this is what I really envy you, and I want to congratulate the Pakistan government or the provincial government for giving you access to this data. I've been trying, just as an example, to get the data on income taxation, individual tax data, and it's not available to researchers. So this is a very, very progressive. And I think, in your paper, you pointed out a lot of stuff that I think is extremely useful. The tax rate, you say, is 20% or so. And that doesn't seem to be very high. So why is the tax, if you will, and the compliance that you get, I think you miss by about 15% or so between the tax reporting by the individuals as well as in terms of the truth. And there, what you get is the following, that basically the tax rate is low. That is not what is causing it. It's the kinks that are causing this stuff. And again, that is something that should be very, very simple for the administrators to remove. One reason why the kinks are there is precisely because of discretion. that there is, now in salary there is not much discretion because you're reporting, but apparently it does seem that in the non-salary income there is discretion. There may be, if you will, rent seeking on the part of both the tax administrators as well as the taxpayers. Let me just, take 2 minutes to share with you the results on what I found in terms of the data on India. First of all, we have this whole, the number of taxpayers seem to be, but there might be a lot of non-salary taxpayers, that is self-employed, which is being missed out by this. But the numbers, in India, it is something like 28 or 30 crores, 3 crores. That is the total number of taxpayers in India.
Personal income tax?
Personal income tax, what is right?
2.5%, I think.
Yeah. And yours is?
It's less than 0.5%, around
Yeah.
0.5%.
Now, in terms of how much we collect in India, and that comes to the next, is about, what, 1.5% now of GDP, or maybe less than that, 1.3. But here are some of the results on the Indian side. Basically, compliance amongst the rich and the poor is about 50%. So 50 to 60% is the compliance, whether in terms of revenue. There are two forms of compliance, whether it's in terms of the number of people or in terms of revenue, it doesn't matter, it's about 50%. In India, we miss out. The total tax collected in India is about a third, or 40% of what God would collect. So the missing link, the missing middle, is exactly from somewhere around 5 lakhs to 15 lakhs in Indian salary, which is the self-employed, which are your doctors, which are your lawyers, which are your panwalas, you name it. Basically, anybody who's self-employed is vastly underreporting income. The salaried person can't really move that much because the TDS is there, which is an important technological innovation which came out, 10 years, 12 years ago, and has worked quite effectively. So the salaried person does maybe have 10%, whatever leeway, and even that I think is not possible. But 50%, okay, 50% of the entire tax revenue is basically lost and lost from the middle. Or 70% is lost from the middle and about 50% from either side. So that's number one. So therefore, this U-shaped, what do we, in order to increase this compliance, and basically in property taxes, you get, to the extent the properties have a very, very low value, that is dependent on the circle rate. The circle rate is a function of capital taxation. So all of this is linked, coming back to that if we were to decrease the capital gains tax in India by about half it, make it 10%, you will get more revenue. But in the subcontinent, we think of taxation not as collecting revenue, but as a moral thing to do. We need to tax these people more because they're earning money. The whole thing is a morality play rather than keeping it simple, collecting it, and recognizing that the political economy of this is what is dictating it. You lower your tax rates, and in India we found that out. Prior to 1997, we had about 5 different tax rates. The highest tax rate was made about 30%, 10, 20, and 30. The whole structure was simplified, and basically we had a boom in personal income tax revenue. And that boom has continued, but is now stymied because the salaried people are well taken care of, but the middle income, not just middle income, the rich professionals are not quite in the tax net. And I don't think you need a randomized control experiment to find out why these guys are not paying taxes or not declaring their income too much. So to conclude, basically, one, I'm very, encouraged to see, encouraged in quotes, that, what is this? This is now 65 years, 66 years after independence. In the olden days, the agricultural income was something like 60% of your total GDP. In India was about the same. Now it's 10 or 15. And we have these rich farmers. And we can't tax agricultural income because, that income is different. because they're actually serving the country by producing food, and therefore we can't have agricultural taxation. I don't think you'll get that much from agriculture, but really, let's get real. These people need to be taxed. Whoever earns income in whatever, from whatever occupation, they need to be taxed if it's above a certain threshold level. We need to get rid of our ancient ideas about taxation, agriculture, and several other things, which will give us a lot more revenue, and then we need to worry about, and I guess this program has been very well organized as to how do you spend that revenue. That will come out, I guess, in the later sessions. Thank you.
Dr. Rathan Roy wants a couple of minutes.
It's actually a question for, perhaps you're the best person to answer it, sir, or maybe the researchers, I'm not sure. But you made an important point when you said that the property tax raised here are largely rule-based. I was just thinking, if you looked at that in India, in my city, it would appear so. But I know in India, it may not be so here, that because it's an oligarchic society, circle rates tend to be negotiated. You'll talk to the top 200 big guys in your town. I'm from Pune, and you'll say, okay, this is what I'm thinking about. The chief commissioner, I'll talk to them. The state guy, he'll talk to the chief minister. We'll come up with the rate. That's not rules-based. That's negotiated. So I just wanted to know how it works in Pakistan.
Would you like to respond? I think coming to that specific question, I am in a position, a little better position than many others to respond to this, was because in my earlier incarnation I was the Secretary of Finance in Punjab, so I was directly dealing with this tax also. There could possibly be an element in that, but mostly it's based on historic collection. In one circle you had collected 100 rupees last year, and this year you have a budget which is 15% more, so you will adjust it to 115. And unless somebody cries horse, that's the target that has been fixed to you. So it's mostly on historic basis, on your historical collection basis, that you've been fixing your targets. And that's how it goes on year after year. There is a possibility of major change on the basis of two things. One, because of the peripheral areas, they are brought into the tax net, and then new properties are developed, and therefore they have to pay the tax. And that's where you can raise the budget at a much higher level than the historic growth rate. And the second, of course, is that where you change the tax rates. Under our taxation laws, the rates are supposed to be notified every year. Unfortunately, we have not been able to revise them since 2001. That effort continues, and that's something that Sir, you had pointed out earlier, that element is certainly there. But that's the effort that is being made in the government of Punjab. But that would be a game changer. If you change the rates, there's a categorization from category A to category E, and for each category there's a different rate. You change a B category to A category, then of course the budget would go substantially higher. So, unless there are any other questions, can we take questions from the audience, sir? Please. Ji Dr. Saab.
Thank you, Chair. Let me first congratulate all the three authors for excellent paper and educating us on three types of taxes: property tax, firm tax, and the presentation on DACA. I have two or three questions. One on property tax. There are always reward and penalty for tax collection. Your entire presentation is on reward side. Give them bonus, give them incentive, so that they can collect more taxes. Now, why someone indulges into malpractices? Because the earning from malpractices must be higher than the reward which you intend to offer. As long as your bonus is less than the earning from malpractices, this is not going to work. I can give you an example. In FBR, the chairman is sitting there, we have already instituted, there are certain staffs who get double salary, supposedly on the basis of performance, but it has not worked. So as long as the bonus or reward exceeds the amount earned from malpractices, this may not work. So in order to curb that malpractices, we need some kind of penalty. I have never seen in my life any tax official have been fired because he or she indulged into corruption. So you have to make both reward and penalty together. Second part, on merit-based appointment, on ongoing work, I think you have. This is absolutely fine. I have always been advocating through my columns that unfortunately we have a culture of what I call apna admi. My personal man, or my favorite, the man. So,
Dr. the organizers keep on pointing out to me this paucity of time, so if you could just please wind up the
your
questions.
idea is absolutely fine, but I don't know whether it will work in our society or not. It is yet to be seen. As far as agriculture income tax is concerned, one suggestion to Chairman. Sir, can it be possible if you ask the provincial government that let us or let me collect the taxes on your behalf, and after deducting the collection charges, we will give you that money back? Can this be possible? Thank you.
Yeah, thank you very much. I do want to respond a bit on the question of rewards and penalties. And I think it relates also to the comments from the other discussant about sort of in some sense, the roles of this kind of empirical evidence. I think when we started this project, some people maybe had exactly your view. This won't work. Because, why won't it work? Because you're paying them 20, 30%, but they can get so much more in terms of the malfeasance of other practices. And in some sense, I think this just highlights the importance of this kind of rigorous evidence that we have. So we were able to show by comparing the places where they had the performance pay and that we didn't have the performance pay, that in fact it actually does work. That's not like a mathematical theorem or things you can prove without actually going to the data. It's not obvious in some sense before you do it, but in some sense the point of this kind of research is to actually suggest that no, in fact it does work. And we can check and show there's more money in the bank in those circles. And so I think it suggests that, man, we could talk later about why that might be. I think that we have some understanding of why it might be that it could actually work. But the key point is that the evidence suggests it actually does. And I think that this relates to one of the opening comments that was made in the first session about sort of the point of the IGC and this kind of engagement is to say, look, there's we really do need rigorous empirical evidence to help provide the inputs to policymakers, like for example the chairman to my left, which is say, look, there's a lot of ideas out there. Some people think they work, some they don't work. We have anecdotes on one side or the other, but this kind of rigorous evidence can hopefully provide the policymakers with the kinds of tools they need, or with the information they need to make effective policy reforms. Thanks.
And quickly responding to your question, Dr. I think what I have in mind is what we are working on is that when somebody, and the proposal that we are working on is that somebody declares agricultural income, he should either come up with evidence of having paid the agriculture tax to the province, or we will deduct it on behalf of the province and give it to the province. So it cannot go scot-free. He shall have to make that payment. So that's something that we are working on. Unless there are any other questions, I think it's been my privilege to chair this session. We have had some very useful presentations. I found them, as the chairman FBR, very interesting, very important, very topical. I'm sure the audience must have also found them of equal interest. We have had some very vibrant comments from the two panelists. Overall, it has been a very useful discussion. So thank you very much once again. Thank you.